Stocks, bonds, and commodities were all hit hard this week as financial conditions tightened and geopolitical risks surged. Somewhere in there was a mix of optimism of a peace deal, but today was a great example of the recent chaos. A fleeting line from Putin that some advances were made in negotiations sent stocks to the highs of the day. But then there were more sanctions, more threats, and finally a headline that Russia will source weapons to Belarus that seemed to have sent stocks to the lows of the day. Or maybe was it Biden's World War III tweet that killed the market? But amongst the rubble, and overlooked by just about everyone, was another report showing decades-high inflation. The February Consumer Price Index showed another surge in prices, even before Russia escalated its attacks in Ukraine. The headline CPI was surging 7.9%. It appears that everything from groceries to rents and airline fares are getting more expensive for everyday consumers. But if you do the math correctly, inflation is likely well above 10%. Regardless, the inflation fire is already hot, and now with war-driven inflation added into the mix, the fire will grow even hotter. So, will the world's central banks pull their stimulus earlier than expected? And today we're going to look at the full cycle, beginning with the daily chart, moving to the weekly, and then the monthly chart. So here is the 6-month daily chart on the spiders, the SPY, and the close on Friday, 4/20/07. Now, this line here, more or less straight, you can see that we've hit it once here. We went through at this point here, which was the start of the war, but I'm going to call it a hit, and then we did another hit and then a fourth hit here. So actually a number of tests on this line here, more or less. Now the question is, when are we going to bounce and recover? And I'm thinking very soon. I was hoping it was going to be this week, but I also said it's a possibility of into next week. So now that Friday has closed, we're just going to have to look into next week. So let's take a look at this formation. Again, I'm looking for the W formation, and this is very ugly, but let's do it. Move down, then the move back up. It got reflected back down, and we're trying to move on up. It's a bit muddled, but when there's a war, what can you expect? But I think the probabilities still lie in a recovery coming relatively soon. Moving on down here, you can see in the volume actually is really starting to decline. So things are calming down, whether you believe it or not. Moving here into the MAC, you can see that first downward trend right here, and then we've had a couple other moves down here, and then a reflection right here. So it is difficult, but we're within striking distance of that zero or midline, so I think things should improve next week. Moving on down here, you can see that improvement here in the histogram, all the way moving up like that. So at least by that measure, things are improving. Even by this measure here, things are improving. So even though the price chart's not moving, which, yeah, I get it, price is the ultimate, but even though the price chart's not moving, the oscillators are saying that we have some divergence going on. I think sooner or later the market is going to turn, and I hope it is next week. I think that's the probability. Once again, improvement there. Once again, improvement there. Do I need to say it another time? Yes, right there. Moving on up to the price chart, one last look. Let's go now and take a look at the weekly chart. Into the 3-year weekly chart, I'm going back 3 years to give us some context here with the move there in early 2020 from the pandemic. Now this move here, it's not as sharp and deep, but it's a little bit longer and it's grinding down. So there's a difference between the two. We'll look at some of the other differences here, which is the volume. Definitely the volume here, nowhere as bad as it was back here. Now it could get worse, but I just don't think so. I think the probabilities are that we're calming down. Here in the MAC, you can see this dive down to that point here below -10. We're just moving through that zero line with the fast line still above. There's a difference between the fast line and the slow line, which can mean some volatility, but the fact that we're near that zero line means there is more strength in the market. And you can see that also here in the histogram, that dive down to this point here, we're not there. We're only half that level, but it is grinding on down very slowly, but I think it's trying to bottom. Now, you can see an attempt here in the price rate of change with the fast line trying to curve over, but it's not quite there. But I think the attempt is beginning, so hopefully here we will make that bottom and move on up. Here into the relative strength, we're at a 28.68, so it's relatively weak. Certainly above where we were back in early 2020. Now not too far above, but still it shows that it is a bit stronger. Now we can always continue to weaken depending upon what happens this weekend or into next week with Russia and Ukraine, but for the most part I think the probabilities still lie in improvement into next week. There you see the stochastic now, that's at about the same level here as it was back in early 2020. So a lot has been wrung out of the market. Now this downtrend actually may have started back at that point there. So that's 1, 2, 3, 4, 5 into 6 months. This, if you start at this point, was only 1, 2, maybe 3 months. So definitely this is more pain to it, at least in terms of the time. Now here in the Williams, we had the maximum negativity at that point there, and we're making another negative attempt here, but I think it's going to get truncated sooner or later and hopefully move on up. Now let's go back up, take a look at the price chart one more time. Let's take a look at the monthly. And now this is the 20-year monthly chart on the spiders, and there's only a few things that we need to take a look at here. A couple of important things though. Now as you see, this is the top of the market a few months back, and we've come down here and we're just sitting above that 20 EMA. Now the short-term cycles in the daily chart and the weekly chart indicate a probability of a recovery. And that would be a recovery that would, in the monthly chart, be a reflection bounce up off of that 20 EMA. Now, if that happens, we head back up here and we'll take a look at a potential double top. So that's in the future, but it's something that we need to keep in our mind. The other problem, though, that I see with volume calming down is fine, but the other problem here is the MACD. You can see now the fast line has pierced through that slow line. That is never a good sign. Even if we get a reflection here, that shows a big crack in the market. If we get that reflection on up, it's going to have a lot of power move up and through that slow line. It's possible, we've seen it, and it may happen again. This is perhaps a good example here where we came on down and we did have the strength to turn and move right back up. This might have been another example here, but there aren't too many of those examples when the fast line moves decisively through the slow line and then heads back on up. It doesn't happen very often. Of course, it did happen here in the 2016 time frame, but otherwise we're going to be looking at something perhaps like 2009. Now, I'm not saying 2009 is going to happen. I think we're going to get this reflection, but you have to remember the possibilities of a breakdown. Anything can happen. here into the histogram, you can see that definitely things fell off pretty sharply, and we're still on the downside. Here in the price rate of change, same thing. There in the relative strength also, all the way down here to the 50-year midline, just barely breaching through the underside. And then here to the stochastics, I think the greatest probability is that we'll come on down here, and looking like these recoveries in many respects, I think the recovery will be above the 50 or midline. That's the probability. We head on up. But we do have to watch out for what happens in the future, and we'll pay attention to that when that time comes. But for now, things are looking relatively decent, hopefully, for a recovery on up there, similar to those recoveries that we had in these time frames. Maybe even this one in 2011. Moving back to the price chart, here we can see that things are looking a little tepid. We hope for that reflection off of that 20 EMA, and then we'll worry about this double top in time. And for today, that's ChewDog Charts. Thank you.